Everyone, how are you today? So today I'll talk about volumes. This volume is the indicators, and here like how you can use this volume. First, you need to decide the time frame. Are you are intraday trader or you are like investor? If you are intraday trader, the right time frame will be the 5 minute to 15 minutes, and if you are like investor or doing a long trading, you have to see in the day time frame, right? Let's look at the trading view and start look at the chart and understand. So I'll go and select the random time frames. So I would say, well, first I'll talk about the strong bullish or weak bullish, then I'll talk about this strong bearish and weak bearish. Let's look at the bearish candles. So I can see uh, yes, over here I can see there's a gap up, but I'll go a little bit somewhere more complicated chart so I can see this. Yeah, this one is 20-second. I'll zoom in a little bit. So this is the indicator. First, you need to go to the indicator, select the volume. This is the volume indicator. Select it. Once you select it, go to the setting. Select volume MA. It's a moving average. Select this one, and ML length will be a 20. Set as the default setting. Okay. Right now you see this is the one. You can reduce the opacity and everything. So start. This is the big gap down started, but you see there's a large number of green candle which is bullish. This indicators helps you out to understand number of people are who are buying, who are interested in buying and selling. You see the long green candle and price also going, it's going high, right? I show that this strong bullish or whatever it is, it's always work parallelly with the price. So if your price are increasing and you have a green volumes, which mean it's positive. If your price is increasing and the volume and the it's not that big green candle in terms of volume, which means that is a weaker bullish, and same vice versa go for the bearish, right? So this is the one, it's a green candle, and you see number of people who are interested to buy, it's very high. And right after that there's a red candle, and you see there's a red, right? So which means this red candle, it's not engulfing the previous candle. So this high probability chance this could be a fake, and we have been like, see this is a red but it's going up, so this could be a fake big candle in the lower time frame. Well, if I show you that, it will be very fake, right? It's most probably take a stop loss and something like that. In the next frame you see there's a green candle. Why we selected this? Because we have a larger big green candle, that's why we follow those same rule here. And then we goes down, and in the fourth candle I see the price is going decrease, and the number of volumes, it's red and also decrease with. So as I said earlier, your price and the volume work parallelly. So if you see your price also going down and the number of volumes also red and high, so the high probability is going to be a fall, but this is not in, it's not the case over here. So we will follow the price time frame, and it's going down. We have been seeing the red three candles and it's going down again. The fifth, this candle is green, right? You can see this green candle, but the green candle size is not engulfing the previous candle, which means this will be a bearish again. And again you see there's a whole long bearish. Same goes here, this is almost engulfing, but we have a very strong price over here. So we will skip this one and do not see this one much, put attention on it and go down. Right after that you see there's a doji. So doji also works in the different balance way, so you need to understand this doji. I like in the next future I'll talk about the all the candlestick patterns, right? So after red, it's, you see there's a very small red, which means number of sellers are not interested here. So there's a high probability this could be a future in the next candle could be a green. So that was happen here with a strong greens, which means people are more interested to buy and price also increase, and this goes so on. on very top. Again, doji comes here, and you see that people who are interested to buy, as I said, it's always work as a price is a major one, and then volume is a secondary. Then the doji, the red candle, and red candle you see this almost covering, so which means we have to be a little bit concerned and show a little bit awareness of here, like how we can do that. So we start following the trailing stop loss and putting that again here, and you see the large number of sellers are interested over here, so we will definitely go for the bearish now, and you see it's keep going then. And in the next day again it's open as a breakdown, right? It's going to be a gap down because we have been following previous as a red, and this time is a strong bearish. So in the previous candle I talk about strong, I showed you that strong bullish, weaker bullish, and now it's a strong bearish. So there's a red large candle, which means this will be a very high probability this will be a fall, and you can see number of price also high and volumes are like very high. So you see over here it's all days it's been going, it's falling because none of the green candles, people are like number of green candles are very less, which mean that people are not interested to buy or more interested to sell. So this whole goes down. So yeah, this is the one of the example or talk about the volume. So feel free to use, and it's free, and thank you for your time.